Crypto kids, welcome back to another video. Today, Bitcoin went over $70,000 and Ethereum went over $4,000. After doing so, both assets had, well, we've had two very volatile wicks. We can see an exhaustion of buyers at this top level and an exhaustion of sellers at this bottom level. So this is actually bullish. I think the market can see a turnover from here, but I'll jump into it in the upcoming minutes. We have a lot of things to look at, including gold, which has hit an all-time high, the Dixie, which is the dollar index that's going into lower territories, and that's important. I'll explain why it is important in the next couple of minutes. We'll go through the stock market, and other than that, I just have a bunch of data as always to go through, so stick around. It's going to be an awesome video. Leave a like if you do enjoy it, because it takes a lot of effort to prepare a video like this, and your like would mean the world to me. Other than that, subscribe if you haven't already. Turn on the notification bell to be alerted as soon as I post these videos, because you want to watch them immediately, as they are time sensitive. But that is it with the intro. Let's jump in straight into the Bitcoin 4-hourly time frame. But before I do, if this inverse head and shoulders does seem foreign to you, I shared this in my community. I think it was last night. So last night, I shared that Bitcoin is just breaking from this inverse head and shoulders pattern, and that I would expect it to go higher. I didn't add more to my long position because we already DCA'd into it, and I didn't want to personally add more. I'm happy with my holdings. So Bitcoin did end up breaking it just a couple of hours ago, and it hit $70,000. So congrats if you did decide to take a trade and you are in the Crypto Kids community. If you're not, then you can go ahead and join for absolutely free using the link in the description below right over there. And remember, guys, we are running an Apple Watch giveaway for the Crypto Kids. So if you do not have a place to be trading Bitcoin and other cryptocurrencies on, you can use this link to be able to get a chance of winning an Apple Watch giveaway over on Bitflex, and I have a complete tutorial video on how to use the platform. So we broke out of the inverse head and shoulders pattern, and we headed to a new all-time high of $70,000. But exactly at $70,000, we saw a huge dump. It looks like a lot of people, whenever we hit an all-time high, just like we saw there, we experienced a significant dump of investors. However, it wasn't as large as what we saw here. Of course, after hitting a new all-time high just a couple of days ago, Bitcoin crashed by 14.46%. In this instance, Bitcoin only went down by approximately 5.48%. So much less compared to what we saw last time. And that, ladies and gentlemen, is super bullish. It is indicating strength in the market personally to me. But as you can see, Bitcoin is trading within this take profit range I had for my long positions. As you guys remember, I took 10% off, and then I rebought when Bitcoin was trading at $59,100 into my spot holdings, which was incredible. But to look at what we could potentially do next, we need to jump into once more the macro time frame. So I mentioned this in the previous video, that whenever Bitcoin breaks above its previous all-time high candle close on the monthly time frame, we never ever retest it again. And that's important because, the $69,000 Bitcoin, we may not see it ever again if the monthly candle closes above this line. And there are going to be some things that I look into, including inflation metrics and including the stock markets and gold, because these two have been pumping simultaneously with Bitcoin. As a matter of fact, if I quickly show you this, just quickly because it makes sense right now, the correlation of Bitcoin to gold is at an all-time high. So this should be the one there. So Bitcoin gold correlation hits an all-time high level over the past year. And this is incredible because Bitcoin used to trade like a tech stock, and now it's got its, designation of being a hedge against inflation. And now that the markets are pumping, stock market's pumping is a little bit strange. I'll talk about this, but gold is pumping, silver is pumping, and so is Bitcoin. So clearly, people are scared, right? If we look at treasury yields and the treasury rates, the 10-year treasury rates, these are, they're losing value, right? And a lot of banks are removing these treasury rates from their portfolios. There's some interesting business going on in there. I did a deep dive, but that's a topic that we can discuss for hours. But the main gist is the 10-year yields are losing value, and banks are not putting them in their portfolios, basically. what this means is, well, banks are scared of the performance of the United States economy. They're scared of fiscal policy. And all this is reflecting onto hedges against inflation. As investors get scared, they shift into assets such as gold and now Bitcoin. So as gold hits an all-time high, so we hit an all-time high the same day that Bitcoin hit an all-time high, and now gold has surpassed it to hit a new all-time high of almost $2,200, and that exactly Bitcoin has done. So there is a very clear correlation between Bitcoin and gold. And if we zoom out on gold's chart, we can see that, hold on a second, gold has just been going up and up and up and up because it's a hedge against inflation. Inflation continues to increase, even if it's at 2%, which is the target of the Federal Reserve. Look, good. That's good inflation. So 2% is a good inflation for the economy, but regardless, there's always going to be inflation. And if there's deflation, then that's not good for actually an economy. We were super bullish on gold. I talked about it a couple of videos ago when we were retesting here. I remember it was on a live stream, I think, and I said, look, gold is probably going to go a lot higher, and it did. But Bitcoin is the digital gold version now. That's what we're seeing. And I think this is very bullish because I think gold is very bullish, and that's why I think simultaneously Bitcoin can carry that momentum forward. But in the macro analysis for Bitcoin, as I said, the trend is still bullish. And until the trend flips bearish, there's no point in me selling because, look, in the previous cycle, when we were at $69,000, $70,000, we saw the 3-period moving average cross over into the 7-period moving average. And that clearly indicated a trend reversal. At this point, all moving averages are heading up, meaning the trend is clearly very much bullish. So I'm not looking into scaling out. For example, if we look at the Egyptian pound, which had a devaluation this week. If we compare the price of Bitcoin to now EGP, BTC versus EGP to now BTC versus USDT, we can see that there's a huge God candle that is approximately a 120 or 110% move towards the upside. If the United States dollar continues to devalue like we're seeing right here due to a report that came out today, I'll get into it in just a second, but if the United States dollar begins to devalue, then this is going to reflect on the price of Bitcoin, because just like the EGP, if the United States dollar begins to devalue, then nothing extra needs to be put into Bitcoin for its value to increase. So I think that's what we're seeing here. And with the job reports, I believe that came out, again, I have the data I'll present it to you in just a second. With the treasury yields not performing too well at the same time, I think Bitcoin does have a lot more room to go. And this is the place where Bitcoin is deferring to the previous cycle. In the previous cycle, Bitcoin was that get-rich-quick scheme, and there was a lot of retail FOMO, a lot of mainstream FOMO. Now it's more of an institutional asset. And you see this on mainstream media. You see JP Morgan comparing it to that Business Insider, comparing it to more of a traditional asset, a more mature asset. It's controlled by BlackRock, by Fidelity. There's so much exposure for them. I think 6% of the total supply now. And as this exposure begins to increase, the treatment that we see between gold and Bitcoin will also increase. But the only difference is for the people that are like Peter Schiff and saying, oh, Bitcoin will never be like gold because Bitcoin is too volatile, then let me show you this chart. I came across it just a couple of hours ago, and you can see this is gold back in the 20s and the 10s. You can see the total volatility of gold. You can see that gold was clearly a very, very volatile asset, and in its discovery, like Bitcoin, I mean, Bitcoin is also very volatile. It's only 15 years old, so it's literally 1 year younger than me. And when you're young, well, you're speculative. Your life changes based off of the decisions you take. You're a speculative individual. And I think that the decisions that Bitcoin is currently taking in its life are very, very good decisions, and his future is very much bright. So to all of the Peter Schiffs out there, look, it's the same as gold. It's just a new thing, and new things need time. And I think Bitcoin is doing very, very well for its age, and it's very mature for its age indeed. So that is my overall summary on Bitcoin. After I publish this video, Bitcoin could be surpassing $70,000, and you may be asking, okay, what is your target for Bitcoin in the short term? And The only thing that we can really look at is the target of this inverse head and shoulders pattern. I'm going to exclude that huge wick that we saw because I think it's not going to give us a better justification. So we see a target at $74,100, which I think is a very justifiable target. It's a feasible target. So in terms of a next level for Bitcoin, that's the place that I would be looking at if Bitcoin breaks above $70,000 once again. If we break down in the upcoming hours, usually the weekend is not too volatile. So this move is probably going to be happening going into Monday. Like we discussed, in the past video or in the Moon Show, actually, I said that the move would be coming as soon as the New York market opens, which was at 6:30. And this move happened as soon as the New York market opened. Thanks to the ETFs, we're following the traditional stocks a lot, TradeFi a lot. Therefore, over the weekend, I don't think much is going to happen. But going into Monday, we may be seeing this move if Bitcoin continues pumping come true. And look, with all of these patterns now, I'm much more bullish because as the trend is bullish, then the outcome of patterns and the outcome of different things, they tend to be weighted against the bullish side rather than the bearish side. But when you're in a sideways action in the market, then it's much more harder to predict. So if it's a bearish trend, then these patterns usually end up breaking bearish. But in the bullish trend, they tend to go higher. And that covers my total analysis for Bitcoin. I'll jump into the news very quickly. But looking at Ethereum, Ethereum hit $4,000, which is mind-blowing. We can compare it to the previous cycle for Bitcoin. As you guys know, I mentioned this ascending triangle so many videos ago, and we bought Ethereum exactly there between 2.1 to 2.2K. So huge congrats if you were able to accumulate Ethereum at those levels. We can see a similar thing happened in 2020 to 2021. Ethereum comes down, retests this prior resistance of this ascending triangle, and experiences a massive parabolic run, just like we are seeing here. Be careful, Ethereum is at the crucial level of resistance at 3,950. So I scaled out some at 3.5 and I scaled out some at 3.952. The remainder I'm not going to sell. That's just going to be hodling Ethereum to see what happens. But if we look at this chart as well, look, I think Bitcoin and Ethereum are in this cycle of the market where we're in a parabola. And in parabolas, if we see moves towards the downside, they're usually buying opportunities. Like I said, if the trend is bullish, then the overall outcome of the market until the trend flips bearish is going to be going higher. So if we see these dips and corrections towards the downside, it's usually giving us an opportunity for buying these assets at a cheaper price, which is why I accumulated Bitcoin once we fell below $60,000, because I was like, hold on a second, we may be not seeing a sub 60K Bitcoin in a while. If you remember, actually, if I go to the weekly time frame, it's going to seem similar. This is, of course, on a much smaller scale, but if we go back to when I was coming back from Japan, we can see a similar price action. There was a huge exhaustion of sellers or buyers here, and then the similar thing happened here with a reversal hammer candle, right? And we saw this 2 candles back to back, and Bitcoin continued to rally towards the upside. And if I just compare it one more time, you can take a photograph in your head, or you can go back and compare the two things that I'm trying to say here. But we had an exhaustion and then another exhaustion, and then Bitcoin continued to rally towards the upside. Similar thing that we're seeing with these 2 candles as well, but on a smaller scale. So that is my outlook overall on Bitcoin, Ethereum, and going into the traditional stocks. S&P 500 is continuing to rally thanks to mostly NVIDIA, I believe, because NVIDIA is just printing all-time high after all-time high. We almost hit $1,000 per share for NVIDIA, and that is huge. So I think until the S&P continues to pump, gold continues to pump, Dixie goes down in value, then Bitcoin should be reflecting very much positively. And in this situation, the actual market, it is experiencing a lot of inflation. There are a lot of economic trouble. And I think that the money that's being printed, it's going into the stock market to represent a full sense of economic prosperity. That's what I'll call it. I talked about it in more detail in the previous stream, but I'll leave it there. So that covers my overall analysis. But we do have a lot of things to be going through, such as the ETF inflows. We can see yesterday it was at $470 million. The day before, 333. So we kind of had like a cooling off period, but I think today with the volatility on Monday, so the data today is going to be representing yesterday's net flows, and this is because the settlements are on a T+1 basis. the ETFs purchase the Bitcoin on that day. So let's say we had a huge move today or whatever happened. They follow something called the CF benchmark, which is a accumulation of all of the exchanges and the average price of Bitcoin on these exchanges. Then the ETFs accumulate on that day, and the data is reported on the following day. And that's why we'll be seeing the market actually buying up the Bitcoin today. However, it's going to be reflected on Monday's data. So do be mindful of that. We may be hitting the $600 million level once again with the upwards momentum that we saw today. But incredibly, IBIT is still outperforming the SPY ETF, the QQQ, which represents the NASDAQ top 100 companies. These are legendary ETFs in the space, and IBIT outperforming them is something unheard of. So this is really, really incredible. And what is more incredible is that Fidelity is putting Bitcoin into their model portfolios. BlackRock is putting Bitcoin into their strategic income fund. BlackRock is also putting the Bitcoin ETFs in their global allocation fund. These funds and portfolios are worth tens of billions of dollars. I didn't want to go too much in detail with this because you can, but I'll summarize it in this way. So the ETFs, first of all, don't have options contracts. I'll get into them. But these ETFs, so let's say an institutional buyer wants to allocate some money in their portfolio. They're not going to be really buying, let's say, the Bitcoin spot ETF or X commodity, Y stock, Z, etc. They tend to buy growth portfolios or give their money to a hedge fund or a portfolio manager, and they diversify by themselves. And these products, such as the Global Allocation Fund, they diversify between different bonds, different equities, different commodities. So the meaning of these like global funds and portfolios using the Bitcoin ETFs in their small closed-off fund, or it doesn't have to be small. Some of them are massive, such as the BlackRock ones. This is the bullish news that we want to hear, because the institutional buyers buy these guys, right, these total funds, and the funds accumulate the Bitcoin ETFs or different commodities into their overall portfolios. So this is incredible news. It means that institutional investors are getting indirect exposure to the Bitcoin ETFs, and once Wall Street, or as Wall Street is seeing this huge FOMO into IBIT, into FBTC, they're seeing their performance go up in the past couple of weeks and outperforming so many ETFs in the space. I think this is just leading them to FOMO in more, and this is all, of course, very, very good for us. What was a little bit of a setback is that the SEC pushed back the timeline on BlackRock's spot ETF for options trading on their options trading applications. This is not huge. It's the options trading brings much more volume into the ETFs. It allows hedge funds to use the ETFs to hedge against, their risk or whatever. So this is something that would bring a lot of volume. And if we compare it to the SPY and the QQQ, we can see that the Bitcoin trades are going and surpassing the QQQ and SPY despite having options trades on them already. So imagine with options contracts available for the ETFs, they would be going out of the roof and probably making historical highs that has not been seen ever before. So that would be breaking the Wall Street Journal, because we're still not seeing the Wall Street Journal, the Financial Times, or Bloomberg Market Watch reporting the fact that Bitcoin crossed over $70,000. They're focused on other things. And that's just showing the difference between this bull market and the previous one, because in the previous bull market, like these entire pages would be filled with Bitcoin related content. Yes, we did see a small article on the WSJ just a couple of hours ago, and a little not so bullish one actually reflected on The Economist. But overall in the macro, we're not seeing the Bitcoin narrative being pushed over $70,000 as much as it should have. And speaking about Bloomberg, by the way, if you guys didn't see, I will hopefully, fingers crossed, be hosting a crypto show on Bloomberg very soon. It is something that I'm super excited for, but as soon as there's more developments on it, I will be letting you know. So stay tuned. It's going to be absolutely incredible. And talking about, mainstream media hype and retail investors, this was on March 4th when Bitcoin surpassed the all-time high for the first time in 2.5 years, when we went to 69.15, and Bitcoin was the second most searched thing on the internet in the United States. If we compare it to today, where we surged over $70,000, arguably something even bigger, it's not even on the charts at all. In fact, Fortnite is dominating the leaderboard. So it goes to show that people are still, unfortunately, not as interested as we want them to be in the space. And going over the rest, the ETFs are breaking volume records already. So we had $10 billion worth of volume when Bitcoin surpassed the all-time high on Tuesday. So far, we have over 2.2 billion in volume already, and this is set to be breaking the record which we created over on Tuesday. So massive, massive news. The Bitcoin ETFs accumulated 166,936 Bitcoin since their launch, and we talked about this, right? There's only 1.35 million more Bitcoin to be mined in all of these cycles that are going to be coming up in the next 100 years or so. And if the ETFs continue accumulating at this rate, well, it's just not going to be matching supply and demand. And therefore, based off of that, the markets should be pumping, and they are pumping because of this news. Let's see how long it sustains for. But that's pretty much it. I mean, this was a very interesting tweet posted by Willy Woo, one of my favorite analysts. And we can see here when in July 2010, Bitcoin was worth 70 cents, which is when Da Vinci was famous for mining Bitcoin. And then it popped 10x in 5 days, and then another 1000x in the 2 years following it. Why? Because Bitcoin was introduced to global liquidity with the advent of Mt. Gox. So Mt. Gox was basically one of the first, or if not the first exchange to facilitate Bitcoin transactions and provide liquidity to the asset. Meaning overall, whenever Bitcoin becomes easier to be purchased, easier to be bought by the market, the price keeps going up. And eventually buying Bitcoin is not going to be this complex process when you have to sign up to an exchange and deposit funds and do KYC, whatever. It's not going to be as complicated as that. And at that point, because the entry or the barrier to entry is super low, then the price of Bitcoin is going to be at places which it would be too late anyways. So until that time comes when buying Bitcoin is still difficult, it requires some work, this is the time to be accumulating, in my opinion, because when something becomes too easy to do or becomes too saturated, then it usually means that you probably missed out. And remember, only 4.5% of the world are into crypto or Bitcoin. So there's a huge percentage that is not even involved yet. Justin, the Bitcoin ETFs are catching up to the gold ETFs for total assets under management, which is unbelievable. We already surpassed 50% in terms of assets under management in which gold has. And remember, this is actually verified on the blockchain compared to gold, which we don't know even exists. So this is all very revolutionary and all very much fantastic. And the people actually selling their Bitcoin holdings are these smaller investors, and they're selling it to the large guys. So it means that the weekends are exiting the market. The short-term buyers and sellers are trading and doing whatever, but the long-term players, the big whales, are accumulating, and that's of course bullish. This is something I wanted to check out. So we talk about the total volume coming into the ETFs, which has surpassed 10 billion on Tuesday. Today we're at 2.2 billion, etc. But if we look at the other crypto exchanges, like Binance pulls like $45.9 billion. If I'm not reading it correct, if I'm reading, yeah, $45.9 billion. Sorry guys, it's like 12 a.m. and I've been super tired the entire day. And like, if we just look at the cryptocurrency exchanges, they're doing so much more volume, but of course the traditional finance space is a lot more hyped right now, and that's why we're seeing the buzz going around in the crypto world. Also, the ETFs have launched new commercials. I don't want to go through all of them because there's like 4 different ones and they're pretty boring, but still they've launched new commercials, and that's good because they're seeing their ETFs perform, and that's why they're investing into marketing to bring it out to more people, as much people as possible, and that is all very, very nice. So we talked about this. What came out today was actually the United States unemployment rate, so that was what I was talking about, and I believe the unemployment rate is at the lowest point since President Nixon. Don't quote me on that, but it's been a very, very long time since unemployment was this low. So yeah, I think it was the last time was like 1953. So that's probably the same. No, Nixon was before, wasn't it? So it was, yeah, but it's been just a very long time since the unemployment was at such low levels, and the market's been pumping because of that. The S&P 500 has been increasing because of this fact, but the reality is not that. So look, I gave a presentation on why the unemployment claims are actually not representing everything that it should be. So there's approximately 160 million people in the United States that are economically active and have jobs. But how do you survey unemployment? Do you go to every single household and give them a survey, or what do you do? It's impossible to do so because there's some areas in the US where there isn't Wi-Fi or you can't reach them. Like, how is this going to work? So what unemployment does is you basically select, I think they do like 1 million households per year, And based off of that and based off of their representation and how they've diversified who they go to, then they increase the sum and make it an exponential and then come up with the data they have. So it's not fully representative and the data collected is not too accurate. And the similar thing goes to here. So the reality of people having, but in reality, the number of people actually employed fell by 184,000 according to Zero Hedge. But the US economy added 275,000 jobs in February. How does this work? Right? Like how does that work? And the answer to this question is the rapid increase in workers holding more than one job. And why would people need to be holding more than one job? Well, because they're not making enough money. So they need to go out and actually seek more jobs to be making more money to put food on their table. And that's the unfortunate reality of the situation. Like we can see here, for example, that the real food, which includes eggs, poultry, fish, and meats, they're up by like 20% in prices, and that is just mind-blowing figure. So yes, you can see that the unemployment data is bullish, but it's including people that are taking more than one job, and that's, to me, that isn't a great thing whatsoever. We can see here, this is pretty important. So there was a debate between the CFTC and the SEC about what we should do with the Ethereum ETFs. Is it a commodity or is it a security? So the CFTC is, of course, responsible for commodities. The SEC is responsible for securities. And there was this hearing going on. I'm not exactly sure what it is, but there was this debate going on where the CFTC chair was saying that, look, Ethereum is a commodity. And the SEC is saying that, no, it's a security. So they kind of need to come to a conclusion on what it's going to be counted as. And once they do, I think, then we will see if the Ethereum spot ETF is possible or not. The news that we should be waiting for is, okay, Ethereum has been declared a commodity. The moment we see that, I think with all of the lobbying that we're seeing from the big crypto firms such as Coinbase, all of the lobbying that we're seeing from Wall Street, even Jim Cramer saying it, like, I think if we see it determined as a commodity like Bitcoin, then Ethereum will have a spot ETF. In my personal opinion, I don't think Ethereum is a commodity. I think it is a security. But, of course, if we get it declared as one, then that would be super, super bullish, and Ethereum could pump to potentially even $10,000 with the amount of FOMO that we see. Currently, the pump that's happening, it's not being caused by inflows, direct inflows like we're seeing into Bitcoin. As a matter of fact, it's just being pumped by speculation. That's why I'm a bit on the edge here, and that's why I started taking some profits. We can see here that, yeah, exactly. So this is talking about exactly what I just explained. And, some more news that we have in the markets. We can scroll down here. Coinbase went down again for the third time in 1 week. And this is crazy. Like, these guys are a huge listed company that should be okay with hiring people to make sure this doesn't happen. They should be able to handle, people coming back in at mass volumes, and them going down for the third time is concerning. It's showing that potentially, okay, look, retail is coming back, but this shouldn't be happening to a publicly listed company. And that was probably one of the reasons why we saw a dump from 70K to 66.6K. The total inflows to exchanges. So this kind of contradicts what we just mentioned. If we look at this, the total inflows to exchanges are very, very low. So probably already existing Coinbase users are logging back if they haven't done so before. And it's not necessarily new people creating accounts and depositing to Coinbase. We can see, though, that the global Bitcoin owners are increasing over time. Yes, the increase is not exponential like we used to see it, but we can see that in December, it shot to 296 million people. I believe this is, it's in millions compared to the 292 million people that we saw back in November. Of course, the banking crisis has started to heat up. We saw NYCB go down. Yeah, it got funded back again. However, we can see that this timeline was something very funny that happened on Friday. The White House said that the banking system is sound and resilient. On Tuesday, Bitcoin hit 69K and gold breaks $2,100, suggesting that, okay, markets are fearing the fiscal policy right now. They're not too certain on what's going on, so they're choosing assets to hedge against this, hedge against inflation, hedge against uncertainty. And on Wednesday, we see NYCB, which is the bank that bought out First Republic Bank, which was one of the banks that collapsed last year, go down. But thankfully, it was bailed out. But this is just not sustainable enough. And this will eventually be a problem and continue being a problem. And at that point, right, where does it stop, right? Where does the national debt stop? Where does the money printing stop? But anyways, right, so this is why Bitcoin is going to help a lot of people. If people save in Bitcoin, clearly in Egypt, for example, we saw the depreciation or the devaluation of the Egyptian pound. If people bought Bitcoin instead, because, for example, the central bank in Egypt doesn't have dollars to give out to people, so they can be buying gold if they find it, or silver, but the easiest thing to do for them is to buy Bitcoin, and that would have saved them. So Bitcoin is a savior. Saving in Bitcoin is, for a lot of people, a way to get out of inflation, a way to protect themselves and not lose their net worths. And that's why Bitcoin is such a big thing, because first world countries are not experiencing these things. It's not mainstream. But as soon as bigger economies go under pressure, then we will see the true value of Bitcoin shine. That is personally what I think will happen. And in terms of macro targets, I really like this chart posted by CryptoCon. We can see this is the logarithmic regressions, and going into uncharted territories where we break new all-time highs, I think the logarithmic regression chart is probably the best thing to look at, because we only have like the Fibonacci extension, and that's probably it. Like, we don't have anything else to say this is the top other than oscillators. Indicators don't really, but so that's why I think the logarithmic regression is pretty good. I think 77, 108, and 149K are going to be good levels of resistance for Bitcoin to jump back to. But that's pretty much it. I'll leave it to there because there are a couple of other things I would like to go through, but I'll save it for the next video. This is, for example, a very good topic to be going into. But as I said, I'll leave this for the next video. So stay tuned. Make sure to subscribe, turn on the notification bell to not miss it. And we can see that the total crypto market is going towards the upside. Altcoins are going up and on Sunday with Mr. M, I'm going to be talking about my top altcoins, and it's refreshed. It's focusing on different sectors. It's going to be super, super nice. So do stay tuned for that. Ladies and gentlemen, have a beautiful weekend. Tomorrow I'll be preparing the video where I go through the rest of the stuff, and I'll try and make a TLDR for the Telegram community. So make sure to join there. Don't forget about the giveaway that we're doing with Bitflax. You can sign up using the link in the description below to participate. But yeah, have a beautiful night, guys, and I will see you all hopefully tomorrow. Take care, everyone, and bye-bye.